For middle-class families, the most obvious thing in the tax code is fewer tax brackets and lower taxes, quite frankly. And according to the Republicans, they say they're going to make this so that you can actually file your taxes on a postcard, on a little card, and send it in. Speaker Ryan and the tax writers in the House, they're really pushing this as winning for middle-class families, the median income. Family of four makes about $59,000 a year. They say somewhere between $1,100 and $1,200 of annual tax relief. They're going to increase the standard deduction to $12,000. That means if you don't itemize your deductions, then the first $12,000 of your income is tax-free. They're also going to raise the child tax credit to $1,600. And there's some other provisions in there for $300 for an elderly parent or maybe a college student who lives with you, people who are family members but aren't children. There are some tax breaks there. I think corporate tax relief is really a centerpiece here. Even as you're hearing so much about what it means for middle-class taxes, it is corporate tax relief that has been unwavering in all of these iterations of this proposal. So what are they saying? They're saying 20% for American companies for a corporate tax rate, down from the stated federal tax rate of 35%. Also, all that money that companies have stashed overseas, the money they earn overseas that would be taxed at 35%, after it's already been taxed by the other countries, that money would be allowed to come back one time at a 12% tax rate. Now, will that create jobs and raise wages in the United States? Speaker Ryan and the Republicans say, yes, it will. There are others, though, who say there's no guarantee that all that money sitting overseas coming back here at a lower tax rate, that just won't go to raise dividends and to buy back shares for investors. Stickiest issues, no question, are state and local tax deduction, mortgage interest deduction, and property tax. Here's why. The state and local tax deduction for some families in New York, in New Jersey, in Connecticut, in California, in Illinois, this is a lot of money. It can be tens of thousands of dollars. That goes away, and instead, your property taxes, you can deduct those up to $10,000. Again, in high property tax states, that's going to be a tough sell. And cutting the mortgage interest deduction in half, this is something that could be a hard sell as well. Already you've seen the home builders and the housing industry upset about this. You can, if you have a mortgage today and you're writing off the interest of your mortgage, that stays. But on new mortgages, that's going to be capped at $500,000, a loan of $500,000. Now, supporters of middle-class tax relief will say, well, this is something that just benefits millionaires and billionaires. But again, in those high-tax states, it could be a sticking point. Most important thing here, this is just a beginning. Now the lobbyists and the tax writers and the horse traders in Congress have to sit down and figure out what this law will look like in the end, and can it get passed.